Okay, I'm here. Yeah, everything is fine. Alright.
One of the highest level traders that we know. Let's start with what Brian Noble told us. Pretty much focused on the S&P 500. I'm not sure if you know Brian. By on our payroll, I mean wait a moment, please. Okay, we're back. So we've had Trader Noble, right? And we'll promote every single speaker because I think the quality of the content was good. So since we're paying Brian for access, I kind of like to show what he does. Daily levels posted about 9 p.m., 9 a.m. London time. Opinions. This is the one he actually showed us. I printed out for free. You know his work. We kind of pay attention to his levels. I'm not saying that what he does, but I try to reverse engineer Brian's levels, and of course, like I'm pretty sure I'm not the only one. So I'll just show you a little bit of what I know. Besides the fact that he's paying fundamental analysts, probably I can't say for sure. And by the way, all the opinions stated here are my own. We're just analyzing the content that's available to us, and to my knowledge, the way I've been checking it out is regarding limit orders. Brian would measure moves, that's right, and take this S&P for example. We go down to the 60-minute. Of course, we're in the bear market right now. We've been relying on Brian's levels, not relying on them, but paying attention to them for quite a while, and it seems to be that on a day preceding the day that the levels are supposed to be posted at, he'll measure a clean move from the start. He'll put a limit order just before the 50 and one just behind the 618. Now the average risk reward seems to be 1 to 1. Maybe more sometimes. I'm not subscribed to the so-called platinum service, which I believe gives more agile intraday setups levels, but to my knowledge stops, at least in my amateur kind of looking for the right word. Rebel analysis. I find his stops often corresponding to below 786 type of thing. So I'm not saying that exactly what he does, but this is just a freestyle session as described. Now, there's a few things for the S&P 500 that I didn't know about, and I learned the first time I met Brian, and that was the McClellan oscillator. Many of you will know it. And if you don't, it's similar to a stochastic. Mr. McClellan, I'm not sure if this is this McClellan, but at least we got. I can guarantee that this guy, I just actually googled it. But if you dig deeper into it, I don't think there's one available for the DAX. So it's primarily for the US markets, but it's an overbought, oversold signal service in a way. So if you want to do more research on it, feel free. Now, Brian said a few interesting things at the event, and again, if you want to check out the service, it's like 40 euros a month. I think it's okay if you know what you're doing around the levels. So since I agree with Ian McFadden that all you need for successful trading is a level and a trigger, this is kind of this is a view that I would subscribe to. In fact, when we got to the nitty-gritty stuff after the event with the napkin genius, this is kind of what I was trying to explain. Jerry, a friend of mine here that also joined the event, how you get to actually finding a level and how you get to finding trigger at that level. Now I've divided into more, but we're not here to talk about my genius. We're here to talk about what the event was actually about. So Brian advised that we'll always to always have a position in the market in a way. I'm a big fan of hedging. This might be a topic for another recording, but it's if you don't have a position, then what? If you read books by Livermore in a way, we as traders, this is the only way we can actually test if what we're doing is right or wrong. So I do have quite a few long-term positions. For example, the dollar longs for the last year and a half almost. Gold, silver, kind of insurance, no leverage positions. They're also positions. So investors will pick stocks. That leads us to favor medium to long-term trading, and I kind of subscribe to it partly, and I'm looking to utilize the medium term, which is a few days to a few weeks intervals in my own trading, but more about it another time. A second advice from Brian Noble was to scale into long-term positions. So Paul Bollas then added a method of how to do it using Ross Hook, but we'll come to it in a moment. But this is not rocket science, you know. So if especially if you're trend following, which most people are, and that seems to be the most profitable style. Although this year so far, since we've got the uncertainty factor in a way, so we're fundamentally positive, right? We're fundamentally bullish, but technically, well, not only we're in a bear market, we're actually in a big range. So range, we suspect some volatility contraction. You know, this is a weekly chart. You know? So if you go to a monthly, now what we need is 12 months. There we go. 12 months, another 12 months. If we don't go, even if we break the lows, I'm pretty sure there'll be buyers there. If we make the highs, there'll be sellers there. So more than likely, we're gonna have a trend, range bound year. So after greedy 2015 and uneventful or bearish for now, 2016 is more likely. Now as you know, what the Fed officials do, and this is on a side note, the new manager comes and then tries to cool down the previous manager's doings in a way. But before they leave, obviously they want to be blamed for actually killing the economy, so they end up doing the same thing. So it seems to be the pattern for now in the bear market. What was interesting is that that's the DAX. I was waiting to show. That's later. You know, this candle on the DAX. This is a classic no supply candle on a daily. So a bounce in the bear market. I'm not saying it will happen. It's Monday as well, so it's likely to be a lower volume day. But we'll come to this in a moment. So to scale into longer term positions again, it's no rocket science. Was Brian's second tip. And using the 50 moving averages. I mean, the 50 and the 200, I don't use them, but just throwing out there, especially on the dailies, you know, like the big guys like Ashraf Lady and bankers. There's even something called the golden or death cross, where the 50 and the 200 cross on the daily chart. I might add them to kind of have an idea of what the bigger long-term players are looking at. But this is a third one. If you want to look into McClellan and oscillator, feel free to do that. But this was pretty much it from Brian Noble. I missed a part of his speech, so that's okay. But then I believe we went straight to Paul's analysis, and Paul introduced the Ross's hook. It's a simple formation. Show in a moment. I try to you can Google YouTube Ross's hook, ROSS space hook, HOOK, and this is simple formation. So you get a new high or a new low, or a sequential high, sequential low, and then they move it the other way. So as you know, often the best starts and moves happen with a new high. We get a new low straight after, and a retracement. You know, so it's also called a 1, 2, 3 retracement. I believe 1, 2, 3 low or high. That's right. So you enter on 3 for an extension D. At least that's how I play it, because technically on Ross's hook you enter on a break off that current low in a way. So I believe this Italian trader described it better, which is a new low, a new sequential high. We've got retracement number 3, that's no break in the low, and they're entering on a break of it. To my knowledge, Paul was advising to be entering on 3. Just like here as well. I'm not sure if he would advise trading on breakouts on this position. Now, the subject of his presentation was some milk in the trade, you know, so how you actually add to your trades. You know, this is the reason I had this silver chart on my screen earlier on. Just to show the real market. Okay. See, for this you do need a trend, and I'm not sure if this was the move. I believe it was something like this. So on the real market, when you've that's 2015 May, right? So that's from last year. We made a high at $17, you know, new low. Even I believe it could be counted off this start of a move. New high, and guess what? Most of them are likely to be fibs. You know, like I'll get to it. It's also not rocket science, but like halfway back delivers, and having that formation 1, 2, 3, it's one of the most basic formations. You know, I called A, B, C, D. So A, B looking for a C for extension D, Now, if you keep getting those hooks, call them hooks. Let's say, for example, if you spike, new high, boom, hook, another retest. You add to them as they go. So you're looking for sequences, series of hooks in a way. So that fits in perfectly with the measure move methodology. And if you're familiar with that, it can be used. If you want to if you want to research it more, feel free to do so. There's plenty of information about Ross hooks available out there. You can always feel free to hit me up on it anytime. It's just a simple mechanical signal. You should technically be adding on a break. So here, here, and away. It's not what I would personally do, because I'd be looking for micro hooks, anything that, for example, new high, micro hook here, and then just always trying to have the risk on the small time frames. Even if I'm hunting at a daily trend or a multiple day trend, execution at least 15 minute to 4 hour is advised. We then had either Alan Hunt or Ian McFadden presenting. I'll go through Anne's software first. Now, I'm not sure if you guys know Anne Hunt. She owns Chasing Returns. It's a free to try software if you're ever interested. It measures your psychological profile based on your records, trading records, and that's the lady. Decent software. Everybody's different. In general, trading algorithms have different behavioral patterns than humans, and the common, like, I'm just gonna fly through most common mistakes, which is low risk rewards for sure. That seems to be a repeating pattern. There is a TED talk about Laurie Santos teaching monkeys about reward systems. You can either YouTube it, or if you want a link, hit me up on Google Plus Stream. I'll send it to you. To cut the long story short, they're measuring at least 5 different statistics, which is what you should all be measuring yourself anyway, which is the risk reward, batting average, well, let's say let's call it win percentage, a discipline ratio. That's an interesting one. I believe that referred to a series of trades. For example, if you've a loss or second or third loss in a row, after that you just wipe accounts or fall into like a downward losses spiral. You know, that means that you're just making decisions too quickly. And what was interesting is that I believe the first cool-off period was up to 5 minutes, so the trades made 5 minutes after the losing trade had the highest danger of being a loser, so the guard against it, and I believe the next one was the 12 minutes. Yeah, 4 to 12 minutes, then 12 minutes to 22 hours, so there's a different ratio there, and from there I think it was 20 hours to 3 weeks, so it's almost a fib extension. Could be. But they also measure velocity, so time between trades. That's kind of covered here. And expectancy. I'm not exactly sure what the expectancy was. We'll touch upon it another time. Consecutive wins, losses for sure. The time of day. some of those also lose importance. So things that are logical that we know, for example, you get a direction decision within the first 60, 90 minutes of the DAX open. So on top of that, if you have a trend, it might make life easier. But all these things that we, some of us already measure, like Adrian, I know, like we've got the journals, but they design software that does it for you, and all you need is just to upload your trading record and play around with it. You know, I strongly advise to do so. We likely to do an event either here in Dublin or in Warsaw, could be Krakow, within the next 2-3 months. So after the, I'm planning for this event to be 2-3 weeks, live trading, real money. After that, we'll just use our software to see if we fall into any psychological traps. The way she described it was that they measure trading performance through particular methodological stresses, I believe. It was good. For example, the first trade of the day usually seems to be good. That's something to note for. Probably people just pay more attention or just kind of do a little bit more work. I'm not sure if there's been another statistic on it, but from their experience, usually the interventions, or let's say the method to take traders out of their bad habits, was an advice to take every setup, so that clearly indicates that you need to have some plan of execution, that you vary size from setup to setup. You know, like if, a lot of you that are card players, you know exactly what we're talking about. But when I'm more confident, I just put more money onto a trade. You know, like you guys know how I trade, so this is kind of what we do already. But all the people just have a fixed size and a fixed TP, and I also subscribe to the view that it's a mistake, because it all depends on the environment. If the markets are crazy, mad out of it, I'll often trade half my size, third my size, but in some cases we're getting 5, 10, 20 times bigger profits. Then target one improvement was the step 2, and that's to have measurable KPIs, right? Key performance indicators that can be put into a metric, like win percentage, you know, the expectancy. Can help, but again, it's no rocket science. It's the same things. Again, that's pretty much it from Anne, which was good. If you have any questions, throw them out there. Correct. Ian says that it will make sense since there's volatility, and the best planned trade is the first, as the market is closed of equity, and so no mental pressure causing tunnel syndrome and mistakes. Right on, Ian, and I agree with that. So the Ross's hook was fairly simple. Domino candle. Just to add to it what Paul was saying earlier on, you know, like a domino candle would be like a first of the stacking candles. I believe it would be one like this. Let's just leave this server. Let's just kind of look at something that's closer to our daily trading. Let's say look at the DAX, if you can find any examples of that domino candle anywhere. Take the 15-minute. I believe it will be something like this one, like a big engulfing candle that's engulfing multiple candles before. Like I believe this will be a domino candle, preferably closing above the high. all these things can be researched. This is why we're recording this session, going pretty slow. Just a freestyle summary, going through setups, making sure we don't miss anything. We've got Paul's advice here, almost summarized. I believe so. To summarize Anne's is Laurie Santa's The Monkey Experiment. You can research it yourself, but let's get to the point. Then Ian McFadden, as a guest, presented pretty much 3 ways of anchoring a fib, pretty much. And to those guys that you are traders meetings, there's no secret. If you're on Symmetry Trading Group, I'm pretty sure all of you will know it. In fact, if you're on it, there is all the slides that Ian used and the presentation are on his stream. So if you want to see them, then hit him up, or if you don't know how, hit me up on Google+. I'll send you his details, and he might accept you. But the way it works is, of course, always you've got the clean fib anchors, right? Since we're in a weird market right now, I'll just go back historically, just a little bit. We haven't got that much data, just a few years, but most of you know how to anchor a fib. An anchor is pretty much starts the moves, right? You anchor it at the start of the move, and then at the end, getting halfway back, or the 618, called a big time groovy zone, right? At least that's how I call it. In fact, any zone that delivers the goods could be called that. That's, in my book, a zone between 50 and 65%. If you trade the measure move methodology, you know exactly what I'm talking about. If you don't, go to the site and buy this book. So then you'll be up to speed on what's happening. Sometimes the market just runs away from you, and there's simply no way to catch it. And what works in indices, equities, much more than currencies, is the extension anchor. I believe that's what Dan Halsey, the guy that owns the website, that wrote the book, use it as an anchor often. So you anchor an extension, and you want that 50 to 65% zone of the extension to hold, and that's a daily chart, remember. And I see it happening a lot, even here. You see that on the daily chart. They often hold with fast moves. Could be, well, fast moves are bear markets, right? Well, there's many ways you can do it, but let's say that move here or here did not give you the halfway back retracement in a way, and it's that's a daily chart, right? So you're looking to get a short. You have a new high in where you see it's not responding, and an ultra aggressive way to enter such a trade, and that's the third anchoring method, would be just simply to take an anchor from the 618 to the 0, and that zone seems to be respected. So it's like a fib within a fib. Works for obvious reasons, it's symmetrical, so I kind of like it, I subscribe to it, but it's for aggressive traders. You see that little, it often bounces off starts of moves, so it's often clean anyway, since we get 618 here. If you read The Dark Pools, the book I posted on my blog, you might understand the inside nature of the markets anyway. So it's just a little pointer. I know Jerry missed it, so I was just looking to explain it to him. Again, if you have any questions, it's all simple stuff. Let us know. I call it an inside fib because it's a fib inside a fib. Uh, I'm not sure if there's any other name. Um, Ian mentioned certain pointers about the gap plays and playing the gaps. Now I don't trade stocks as much, but the anchoring points stay the same. Most of the guys like the events, and that was the second trading forum I've went to, and a lot of the content has been repeating itself, you know. So maybe we should add something new to it, okay? Something, say, pro school, because let's drop the basics, okay? I did a video a few days back with Jerry. And that video was called, I believe it was the part 2, yeah, VPA analysis, which is what's that? That's volume price action. That's the DAX, and you've seen the DAX. So just to summarize, there wasn't much more at the traders forum. So we've got different anchors, we've got some indicators, some psychological work, Ross's hook, all fairly simple and straightforward, you know. And let's see if we can better it. So you see the DAX. It's a proper bear, proper bear market. We should use the daily chart. The expected diamonds that never happened, but I was kind of looking for it. We're in the monthly zone right now, and after large drops, after a spike in volume, so we see some indication of stopping volume. So the volume there's so much volume that's stopping actual further declines, and there's a drop in volume. A small candle like this in a short trend indicates lack of supply, simply because people just don't want to be selling this at the current levels. They'll probably be, if at all, be looking to sell around the halfway back, you know, the big BTG zone, call it that way. But how do we trade it? And to be more specific, how do we trade volume? How do we use volume in our analysis? Nobody seems to be talking about it. Myself and Adrian were researching this technique for quite a while now. I'll just show it as it is. So that's a downtrend on the DAX, and you guys know me. I trade both ways, short trends, downtrends. I'm a currency trader. I love consolidations. I love blocks of prices, ranges. You know, this is the environment I excel at. You can see some of the videos on the blog. This is our biggest advantage: precise entries and understanding of auction theory, game theory, all that combined. So I just played the video. I've been explaining certain concepts to Jerry earlier on, and let's say that's the open of the day. I'm not sure whether this is a 5-minute chart. Just for the sake of exercise, let's call it this way. So market opens on quite high volume in a way, and we've longs on high volume. That's what has been happening today in the morning, by the way. Then we've got reaching a level. We've got a candle. This candle indicates still decent demand for, but then the volume suddenly drops on the retracement. So that means that there's less volume. You can treat it as a smoking gun of the big money flows in a way. Just like breakout, like supply demand zones, for example. After a preceding move higher, a drop like this, we wrap up this candle here, a candle preceding the big move in a way, and this is classic, some say, the supply demand analysis. For example, the first test here of the body of a candle, boom, it's a short in this book. But what I've been interested in is this candle. Was this candle, which was a reversal on spike on volume. Now, how do we define these spikes, lower volumes? Now, if it's a spike, it should be above the average and bigger than previous 2 volume candles. And if it's a let's say a declining volume, and the reversal and a point like this, then we want volume that's below average and lower than two previous volume candles. So what does it tell us? That means there's just no participation. So if there are any shorts, they don't want to be shorting here. They want to be shorting higher, whatever. And we can see this in volume prints. So a candle like this, it's a spike in volume and a hammer, doji, whatever you call it. It's a trader itself. It's probably somewhere on the BTG zone of this move. So often these things are fibs, you know. So it's all part of a trigger because you can get the levels. But then what do you do when the price gets to a level? Do you just blindly enter? Well, you could, but I advise not to do it on a full size position. So enter a fifth, a sixth, a quarter in, if you have to at the level, and then wait for something to print, like a candle like this. That's a 5-minute candle, and guess what? It bounced a little, and then you do a micro fib, and that's your entry. Like this is a halfway back, the 65% zone of this candle. Guess what? I'm here. In fact, I was here. I've been trading this live on our stream, on our Google Plus stream. So guess what? It happened again, and we had a nice little printed level down here. Same thing here. Now it requires little practice. But it's a really powerful tool, especially in indices, equities, but it can also be used in forex. So there's, as you see, there's two types of volume setup. So if you're on a level, you get a spike on volume, you get a hammer with the spike. Like often it will often be a proper spike. Like I would advise for volume analysis, sticking to 5-minute charts or higher. So on 1 minute, you often see some signs of stop in volume, but before it actually gets filled, the price already declines like properly. So that's a 5-minute. Happens on 5-minute as well. The 15s seems to be pretty good. Depends on the instrument. We trade in the DAX, so 5 minutes or over is my advice. Take today. Go back to well, here. That's the candle. You see, the beauty of it is that if you want to take a long, you enter on a red candle. Like I was almost always waiting for the first green before I enter. Like even before that, I was in the first green. So I normally be in here, but in this case, I was in here. Yes, it went against me a little, and what I do is I advise to have a 2-tier stop. Let's say a half in or a third, whatever you decide, below the halfway back level, because if the halfway back algos, let's say below the 6.5 to be precise, on such small changes in price, if it was a daily, well, you got two different setups at the halfway back and a 618. But here, if you had like, I'd have one stop, let's say with half of it below the 618, and if it does pierce it, well, so be it. I'm out a half, and then the other half a position below the proper low. Now, for the first half, if I see a pierce and a bounce, I can re-enter, no problem. Like it's not that big of a deal, and no supply, no demand candles, VPA, volume price action analysis. I'm sure there's plenty of content on that topic subject. If you'd like us to cover it a bit in a bit more detail, let us know. We might do another video. But using all that on Ross Hook, on a level, on fibs, seems to be working quite well with stochastic. So stochastic often seems to be oversold, overbought for a while. You're waiting for the right volume setups, for the right candles to start appearing. But what's interesting in this, it just gives you really good entries on a candle that's it's not supposed to be there anyway. So all it means is just this lack of interest and selling away. It's fairly straightforward. I don't want to overcomplicate the process, and I don't want this video to be too long. So I was aiming for about half an hour to an hour, just to summarize it. Jerry, just give me a yeah or nay. Do you understand the concepts presented in this webinar? you. Take it as you do. That's good. There's more. There's more to trading than to our trading that we showed. Let's this be a third of a series of webinars. We just like my ambition for this quarter will be to record as many successful, as many good solid trades as possible, and some that are intra-week, at least intra-week, you know, so multi-day, multi-week trends. That means that I might trade FX a little more, probably some exotic pairs, but we'll touch on it later. So I believe that was a good form for our webinar. And are there any questions? Perfect. Thank you guys. Good luck this month, good luck this year. Let's fill up our drawers. So if we could, that would be awesome. And by drawers, I mean actual drawers, right? So yeah, with the exit, Jerry, well, that's what you do. It's like for this drawer to fill up like this, you need to give yourself a chance to get lucky. That means that at least in a part of a position, you need a way to ride these big moves, trends. And Rafał Zaorski from Trading Jam Session has an ultra simple way of getting out of positions. I don't think he scales out as much, but that's how I like to do it. Let's say if I was in here, let's say we've got a spike, first green, as I like to enter in the first green on a level. If you're around here, it's perfect. You know, we're waiting for the zone. We actually have the zone often lined up on the execution screens, and the execution with the execution broker. And the way I do it is that, let's say I've entered here or here. I'll take some off on the, let's say quarter off on the first red 5. Then I'm moving to 15 straight away, and I'm running my trade on the 15-minute chart. So if I had a candle like this, so be it. Even though we see a spike vol, like it's. Let's just follow the simplest way we can explain it. That we take another quarter off here, so be it. It's red, doesn't matter. It's going across. It's I have like, I will guard against it. Like, so I'll have like halfway back or the 618 on the micros here, just to make sure. Like, if the robots pick it up, why change it? Like this is perfect. And in fact, you could add here after this candle, but let's make it mechanical, and of course can be done better. Listen, we pros here, but this is something to experience running a trade for longer. Let's say you're in half out at, let's say, plus what? 15 pips, or 17 points. You move up a time frame. So you move to 60 then. So that's where you quit on the last quarter, and 240 after that. I mean, this is designed so you can get into big trends. Like this year's environment might not be perfect to running trades on, I know it looks bad, but it just from a super small scale time frame. Like, it can still be done. The idea is to actually get to a daily, to get to the 240 on parts of your position, and you can use series, you can use any profit taken strategy you want. The idea is to actually get to the 240. So you can run it at the level. Yes, Adrian. Just Terry asked me a question here of like taking profit on first green, because if you're scalping, if you're in a smaller time frame world, the 50 and the 60 seem to be really good, you know. So just get to the 60. If you can get to run a trade on the 60 and close everything on the first red, you're in good shape, you know. 'Cause in these spots you get some out of 5, some on 15, but then you just run it to the first red, and in general, it yields good results, you know. It's if you can keep a larger position in there, because I might take some off, and on the pullback I'll add to it. Like we had that trade. When was that? That's from today. The trade I added. I believe it was. Nope. It would be something like this. We had a short a few days ago, but let's say if we're in here and on a pullback, we had some money out of it, whatever. On a pullback, I'm often adding on the first. It's like a 2-tier ad for bigger trends, like a possible trend on oil. We've got two potential, like commodities in general for this year. Seems to be like oil. We're getting some tips about the fact we be careful with tips, but if we could have a look at it. Let's see, Brent, right? Which is the most commonly traded? I don't trade as much. What's this? No. I believe it's CLF, right? That's the tag. Crude oil futures. No, this is not oil. None of it is. I'm pretty sure I have it on LMAX. So I don't trade oil. I was just gonna pop it up here. Let's see if I got it with HFT. That's right, yeah. So let's take WTI weekly, right? Let's just do something to see. We've got smaller candles, still on quite high volume. Nothing shows us that it's stopping, besides the fact that we've got decline in volume. So that right now we just got to wait. We've no idea where the bottom will be, or even if it's coming. But if we see the right volumes / price action patterns, there could be, even if oils go to 45, that's a 50% upswing off this extremely oversold conditions. You know, so it's already oversold. We just need the volume to pick up on the upside. We don't know exactly when it's gonna happen, but this seems to be one of the trades that a lot of people are waiting for, hunting for, and if you can be adding on it this way, Jerry, this could be a good trade idea. Silver. I think it was Paul or Brian that indicated it could be a good trade. I'm pretty sure it was Paul. If I can find it, I'll show it to you. So silver is flattening out a little. You see the size of the candles here. I'm not sure exactly what level we're at right now. It's a proper retracement. I mean, it crashed from like $45 to 13. Right now we still just don't have any indication that it's stopping. Well, you're having a cross, right? The price can only go up, across, down, across. So there is certain types of across, and if you were to start accumulating, you'd be like, you will not be losing money, because if you were around here, you could have bought it, took some off, you're running the rest. You know, bought it, took some off, running the rest. Like, so the way to win in this game, in my view, right now, is just kind of accumulate and distribute, and just play what the bigger boys are doing, and you should be okay. Are there any more questions?
My check.
Yep.
I was
I was
wondering because
wondering
the way
because
you
the way you
explained,
explain,
you were
you
talking
were talking
about
about
Rose hooks.
rose hooks.
I was
I was
thinking, what's the
thinking, what's the
difference
difference
between
between
formation of
formation of
Rose hooks
rose hook
and
and
one, two,
one,
three
two, three
formation?
formation?
It is 1, 2, 3 formation. It's the same. It's exactly the same. It's actually what it's called.
Okay.
Okay.
So we just gotta have a new high and a bounce back in a way. So often these hooks will also be setting up, but it's just a flat pattern. It comes across at a level, and it's like I look at this on the market since Chris taught me that, and like I see flats, even small across like this. You know, it's if it's a double top, if it's a head and shoulders, it's just in a cross pattern. It's not cheating like a flag. Flags often morph into topping patterns, so we just gotta pay attention. Were there any good trades here today? They were, but that's a topic for another webinar. I don't want to keep it too long. We're reaching an hour, so I'm gonna start wrapping up. Um, that was the day today. So that's what I was actually quite keen on the longs. Um, Uncertainty usually delivers technical markets. You know, so I know a lot of people don't expect big ranges or something, but there is uncertainty on world markets. So this could be really good for intraday, maybe for more scalping styles. We'll see. Like I adjust my style to other people's styles. So it's like playing cards. You know, when I used to go to the card rooms, you know, people also ask me like, what are you gonna play? How you play? What's your style? And I honestly don't know. It depends on the table. So the same here. It depends on the environment. You know, if we see the daily ranges being squeezed, like right now we've got 270 pips ranges on the S&P, sorry, on the DAX, about 400 ADRs, average daily range. That's for the last 20 days. About 400 on the S&P, and that was a few days, and they're more likely to pull back and volatility to reduce. So always adjusting, and it's relative risk. What it's all about. But this is what happened today, and that's a 5 minutes. You can easily see it in a 15 minutes. We gapped up, but then with no like I talked about this concept at Dublin Traders Forum. You know, explained it to some people. When you see this first test in the morning on low volume, that means that the big money is not participating. So then you see the proper volume where it hides. Well, that's just how I look at it. You know, if the big volume in the first hour of the day is on, see that on shorts, the volumes decline anyway here. So the big spikes in volume indicates which direction the bigger money is interested in, and it's been amazing little popper here. Like even when you see pops on volume on bullish candles around here, that's a halfway back. That's a fib, or like that's a pattern on the level, and the pattern usually any new high is good. Double tops, double bottoms, head and shoulders, like it just flat patterns, flat price structure. And as you know, price moves in blocks, and so I just had these two kind of blocks down here, and it's a classic range bound day. And this market can be traded both ways off decent levels. Now, we'll see how the rest goes. We expect more volatility in the future, but that's more or less it. And was there any tails here that the market is slowing down here? Well, let's say the small candle, it's a new low, it's perfect, but it's lower volume, and after the two candles, it's a bit big to my liking regardless to others, but and there's no level on it. There's no, like if I had a level originally, it would be here. So I would not be in a trade until probably this point, if I really believed in the longs. And even though we had a downtrend daily, a downtrend 60, alright, I trade in both ways. So I love the trends and I need to be trading with the trend more, but I have no problem taking positions both ways. But this is getting a little bit more into personal style, and that's content for another session. So if there's no more questions, guys, thank you very much, and we'll post it up. Make sure your ratios are good and take good trades. One last thing. Zones, levels, pattern triggers. What we do is we take a monthly candle, we wrap up the zone between a wick and a body, I color it green. Then I'll take the weekly and I color the distance green, sorry, blue. Then I take the daily and I paint it yellow. So we've got extremes, price extremes, and Adrian kind of indicated that it's the way to do it. I do it ever since. It works like a charm. So once in these zones, we're looking for levels. So it's a level is simply a more precise zone, and around these levels, we're looking for patterns. And the pattern is usually a new high. So a break of a trend. Let's say here, that's a pattern. We have a new high, pull back, up we go, and we're in this zone already. So even here, you could say we had that pattern. So it can be done. That's how we look at it, and I just wanted this point to be in the video. So we've got danger of no supply candle, but we'll see how we open tomorrow. If the interest in longs is going to be as high as today's morning, then we might have a pullback of it. But it's a bit early to say. It still looks a bit kind of flaggy, but it's likely to be coming across on the 240 trend line over here. It's already across on this one. It's already like it's not like we need a day for this one. So right now still a downtrend, but again we'll see. We'll trade what's given in the morning. So again, thank you very much, guys. I'll see you around. Good luck. Have fun. Thanks, guys, and have a good one.
So we've got some news tomorrow, and I believe maybe